Thanks for tuning in to the Beyond Normal podcast, where we highlight minority business owners and founders, and we use this platform to shed light on their entrepreneur journey. Welcome everybody to the Beyond Normal podcast. I'm your host, Kenny Groom. We got a very special guest with us today. Just a quick shout out before we dive into things. We want to shout out our partner, our sponsor for this second season of The Lurid. As you guys know, they've been around this entire season curating this list of founders and individuals that we want to bring to you guys just in terms of the entrepreneur, the whole ecosystem. People are doing incredible things, trailblazers in their own right. So I would, at this time, want to welcome our guest, Giselle. Giselle Mello. She is the founder of MATR Ventures. She's going to help me out with the pronunciation when she hops on. But a VC firm they are a VC firm which invests in seed stage ventures with early traction on revenue. They prioritize companies that have a strong focus in digital economy components with three main categories: e-commerce, digital infrastructure, artificial intelligence, and security, and e-businesses. But making sure that we have some underrepresented founders out there getting some big checks. So I want to pass this to Giselle so she can introduce herself and we can get the ball rolling. How's it going, Giselle?
Good, Kenny. How's it going, man?
Doing pretty good. You got the hoodie on. Is it cold there? Where you at?
No, it's actually getting a little bit warmer.
Okay.
But I don't know if it's just me. I highly doubt it. But I think a lot of the world's moved to hoodies instead of the Poindexters. So whenever I get a chance, I'm definitely rocking my hoodie.
I ain't mad at that. Speaking of hoodies, we do have some hoodies for sale on our site. So Giselle, appreciate you saying that hoodies are making a comeback.
100%.
Yeah, that's all I wear. That's my wardrobe: hoodies, hats, and flannels. So I appreciate that call out there. And just one real quick, how do you pronounce the company and the name of the company for folks? I just want to make sure we get that right.
It's MATR.
MATR. Got it.
MATR Ventures.
MATR Ventures. Perfect name, powerful name. So what we're going to do right now, we're actually going to hop right into things. Giselle, I know you got a lot to share with folks. So I want you to give folks just a little bit of background about you. You've worn that entrepreneur hat prior to being in venture capital. So tell folks a little bit about yourself.
Thanks, Kenny. And you know what? Thanks for having me, man. I'm excited to be here. And yes, for sure, go and grab some hoodies. His hoodies are the bomb. A little bit about me. So I grew up in downtown Toronto. So I don't know if whoever's listening is from the US, but I grew up in downtown Toronto. Yes, where Drake is from. But I grew up in a neighborhood called Parkdale. So to all my Parkdale people, what's up? I'd say growing up in Parkdale, I was surrounded by, it's like immigrant city. It's like immigrant neighborhood, Black and brown immigrants from India, from the West Indies, which I think maybe in the US you refer to as the Caribbean, Latin America, Africa. I was born to Brazilian parents. So let's just say I learned to kick a soccer ball before I could really walk. And like any true Brazilians, I love a good party. I love some good food, which Brazilian doesn't. I'm a hip hop head. I love music, house music, reggae, jazz, African tunes, and of course, old school samba and chibalada, which are native to Brazil. And yeah, I mean, I've been an entrepreneur since I was 12. I've had one corporate job, a real corporate job. That's actually with an American company. But that's a little background on myself. And anybody who knows me knows that I'm a big proponent. I'm like the biggest cheerleader. Everything I do in life is from the lens of economic empowerment through entrepreneurship. So that's me. Thanks
for that background, Giselle. And I want to dig into that a little bit because you mentioned, being an entrepreneur has been in your blood, pretty much your entire life. Right? Like you said, your first company that you feel like you ran and you owned since the age of 12, right? But I think when I was doing some research, I know you had some experience with VCs when you had your previous company. That was somewhat of a moment where it kind of pinpointed some of the pain points that you're now trying to focus on when it comes to having that VC world make sense for underrepresented founders? Can you share a little bit on that?
I mean, yeah, I put it this way. I like to talk about solutions whenever I can versus focusing too much on things that have gone wrong. But I will speak to that a little bit. Look, I'm going to say it's been almost 10 years now, 8 to 10 years. Myself and my co-founder, and it was actually a really big team that came together over time. For 4 years, we built a tech startup. I don't think even my friends know this. Is not stuff that I think that I really actually talk about. Like any product, there's you go through your choppy moments. You break a lot of stuff. Eventually, we actually figured it out there, and we started to do fairly well in the world of venture capital. When I say MRR, it means monthly reoccurring revenue. We were doing about 10 for a while, and then we pitched some VCs, and they're like, yeah, when you get to 12, come back. And we got to 12, we came back, and they're like, well, when you get to, so it's just like this moving target that never seemed to end. I think we hit their targets like 3 times, and still nothing. There were times where we'd go and we'd meet with some VCs or some investors or accelerators. And there's always that, I shouldn't say always, I'm going to speak to two specific moments where I remember the team and I were out there and we saw them kind of peeking outside to see who was out there. And it just so happened that, we got the look, they closed the door, and then all of a sudden the meetings was canceled. We thought that was a little bit weird. And then we kind of heard from an internal person that it was kind of like, let's call it what it is. They looked at us and they're just like, they kind of just passed the buck. And then we finally got an investor, and we were super excited about that. I think we went through due diligence for about 4 months, exposed everything we possibly could about our company, the financials, the performance, the projected numbers, like everything like you have to do when you're pitching any investor. And like even when we have to do now as a fund, you set up a data room and you put all your information there, and they can go into the data room and learn everything about you. So we did this, took about 4 months, finally got an investor. And in the final hour, instead of 20% of the company, they asked for 50. So if that's not a kind of like a punch in the face, I don't know what is. And of course, we walked away at that point, no money, all kinds of debt. But we turned it around. And now we're a software company. We've been, I think, 20 plus people building some of the best machine learning, enterprise software, web mobile apps for some venture-backed companies. And we also provide consulting to corporations that are looking to integrate startups and startup technology into their ecosystem or into their structure. So we turned it around, but I mean, I gave you some examples, and I'm sure I'm not the only one who's experienced some of these things. It is what it is. We have to at some point say, it is what it is. What are we going to do about it next? And so that was one of the little seeds that got planted for me to start this fund. So yeah.
Thanks for that, Giselle. And I think it's very important, like you said, not necessarily focusing on, the bad part of the situation, but you really seeing like the light at the end of the tunnel, having these ideas now around how you can really take your experience and make sure, when you're building out your platform and your teams, that kind of, let us peek out the window to kind of see, all right, who are we actually talking to?
Right.
And having like just judging based off of that and not necessarily judging based off the performance. I think it's very powerful that you're taking that experience and flipping it on its head.
100%.
So in terms of VC, what does it take to get started in VC?
Well, so, I mean, that's a great question. I mean, I can give you my experience. I'm sure there's many paths to getting into VC. Am I correct that you're asking in terms of setting up and building a VC fund, or are you just talking about getting into the VC industry from different angles?
I will let you. I think the angle part is probably more so what I'm thinking about, because when it comes to the funding idea, right? What my thought process is around, okay, we want people to be signing checks, right? But I want Giselle to be the one who signs the checks for the businesses, right? So I want to make sure there's more people like you who understand the value, the power in having diverse representation when it comes to VC. So I
Mhm.
think getting into it is where I'm leaning more towards, because I think in terms of the funding piece, I think that's a little bit further along, right? Just being able to wrap your head around, I want to dive into that VC space, is where I want to take the conversation. Does that make sense?
I think so. Yeah. I mean, I guess I'm always careful to speak on personal perspective and my personal route to that, right? Because it may or may not apply to everybody. But my route, well, first of all, it's like it truly is the entrepreneurial mindset, right? Is like if there isn't a door that you can open or break down, or the door's not open for you, you just got to build it yourself. It really it just comes down to that, right? And I really never thought at any point that there would be a VC company that would let the girl from Parkdale who's now on Bay Street into their firm. And I'm just going to keep it real. So you got to build it. It's not there. You got to figure it out. You got to build it. And that applies to any business that you want to get into, as far as I'm concerned. Now, that to say, like, again, some people who know me, who are close friends, they'll tell you that 4 years ago, I didn't even have $500 to pay for rent. I actually, COVID added a year that I'm forgetting about. So about 5 years ago. But then we finally turned around building what we're building at Nishi Studio. And I know I didn't talk about this, but after becoming a supplier to a firm here in Canada, they asked me to be a partner. And so for the last 3 years, I've been doing investment banking deals as well. So I found my way into investment banking. With those two worlds, what has happened is I've done well, right? I've made a lot of other people money in the wealth management space. I've done a number of deals. I've done $5 billion in transactions and deals. And I lead a team that can build pretty much any technology. And when you combine those things, and we've done well, regardless of how, tricky it was to get there, the point is I'm in a position of privilege now where I can take my own capital, because you have to. If you want to build a VC fund, you've got to be the first one to write that check. And I don't know if people talk about that. And it's not a little check. So I'm in a position right now where I can do that. And so I'm going to do that and be the first investor in the fund. And then, of course, then you have to go out there and you have to attract other high net worth individuals, institutions, what they call quasi-institution, corporate investors. These are all investors that fall under a title called limited partners. They are LPs into the fund. And so, we started down that path a few months ago, which, by the way, we haven't officially launched the fund yet. We are talking about it, and we've got a website up and moving and shaking and building great stuff. It hasn't launched yet. So getting into it is a few things, is like, being able to put your own money there first, because investors are going to expect that you have some skin in the game, like any business. And then after you do that, then we have to structure the fund. So what does the fund look like? What kind of, there's many ways to build a venture capital fund. And so, that's another aspect. I don't know if we'll have time to cover today, but we are doing VC very, very differently. But we've put that structure in place. So we put in the capital, we put in the structure, built a team around that, and now we're fundraising. So I'd say those are the building blocks we have taken to build the fund. And again, we haven't launched yet. We're in the process of doing that. We're heavy into fundraising right now. We've got a few million in there already, but we're still fundraising. So that was my I guess my foray into the space. Does that answer the question?
Yes, it does. Just
Okay.
you hit right on it, and I appreciate you being honest with us, having this dialogue, because it's one of those things where we know that there's issues in the VC space around representation,
Mm-hmm.
having people that look like me and you in the space, and nobody really knows like what goes into, what are those barriers to get into the space. And like you just mentioned, like you got to have a big check at first yourself to actually invest that money. And as you know, in our community, just a lot of times when it comes to generational wealth and just having some of that wealth readily available, we know that that's not always the case.
Definitely not the case.
It's not always the case, right? When it comes to, all right, who can cut a check that size, or just essentially, it sounds like write a blank check. There aren't very many people in our families in a lot of cases where we have people that can write that big blank check, what they do at the big events and things like that. Like just a big cutout of a check, like that's almost non-existent. So for you to take that on, that's a big deal there. There's something that you just stated though that you would want to dive into a little bit more. Did you want to elaborate on that part as well?
What part in terms of how we're doing it differently?
Yeah.
I think to share how we're doing it differently may be helpful to provide a little bit of a background on what the typical structure of a VC fund looks like or firm looks like. And if I give you that, then I can share with you a little bit how we're different. So typically, I don't think it's a surprise to anybody. It's mostly, white dudes that will start a fund, whether they exited themselves and they were founders and they can now put that capital up, or whether they're heavily connected with networks, with which a lot of them are, or they went to B school or some Ivy League school. Most of the VC world fits in that bucket, right? And then so what do? They're very they have strong networks. They leverage those networks to build partnerships and get access to what's called deal flow. See, this is their way of seeing deals and seeing startups, right? And so typically, if you're not part of those greater networks, for you to find your way in front of a VC, more specifically the general partners, which run those VC firms, which ultimately make the decision on who gets the investment capital or not, for you to get in front of that individual or group of individuals called the general partners. If you even go to their website, the vast majority of times you're going to see there who referred you, or find somebody that knows us, find somebody that it's somebody that's in our network that you also happen to know. For us to meet with you, we're gonna ask for that common denominator to be there. That person that knows you and that knows us and can kind of give you that, a kind of like a referral, right? An indirect referral. The reality is most Black people and brown people are not part of those networks. So that alone becomes the first barrier. You might not even get a chance to pitch because you're not part of those networks. And so, I mean, that's just one thing. And so I use that just as an example to say, like, fuck that, fuck all that. We've removed all that. If you are building something that is game changing, we want to talk to you. Like, you have a big thick accent because you're from Brazil or Nigeria or India. Come, man, let's have the conversation. You still need to come prepared. You still need to have your pitch deck. None of that changes. Nobody's dropping standards or anything like that. But this whole idea that, if you don't know somebody that knows me, or you're not Wall Street, Bay Street, or you haven't gone to an Ivy League school, like, come on. So first of all, forget all that. You have a vision. You're clear on your vision. You've executed on something, because execution is key. You've started to build something. There's some revenue there. There's some traction there. There's something there, because we're not investing in ideas, right? Entrepreneurs are not the ones it's not about creating the best ideas. Like, can you execute on that vision that you have? Can you execute on that business that you so strongly believe in? If you do, I don't care what your accent is. Like, darker the berry, like, bring it. Let's have that conversation. We want to meet with you. There's no gate. This is not a gated situation here. And I find the VC industry typically to be very gated. Arguably, people will say it's gated by design. Some people will say, no, it's just, you invest in people that are like you. Irregardless, the benefit is not, it's not a beneficial structure for people that look like you and I. And so we've removed every gate. It's a website. You go on there, you upload your pitch deck, you tell us a little bit about yourself, and you still have to come correct. Let's be clear. You still need to be solid in your delivery, in your pitch. You need to have a real business there, not an idea or not a hobby. None of that changes. But we're not going to gate. We're not going to add barriers for you to get to us. Like what makes us so special? No. If we invest in good companies, please know we get a return on that investment. There's something in it for us here too, right? I'm not this pure capitalist who just doing it for the money. I'm not that girl. But let's be real. Like, so when you have these VCs who are sitting at the top of their, we'll call it their castles, saying, I got this, and you need me then more than I need you. I'm like, that's not the case. I fundamentally believe that underestimated founders are the most innovative creatures on the face of the earth. It's just the world hasn't seen it yet because of all these gated structures that exist. So we need you as much as you need us. This is a shared, this is an aligned journey that we're about to go down. So I'd say I'm going to stop there because you'll get me started. Like I'll get passionate about this thing, but like gates. There's no gates here. We are looking for good businesses, and they're looking for capital and good partners. And I'll leave it with one final thing: is there is one reality, which is, and I'm not sure that's going to be different for us. So that's one thing that I want to point out. For every, only approximately 1% of companies that pitch VCs get funding. Only approximately 1%. And it's important to know that because, and I'm going to say in that case, I'm not sure we're much different. And it's not because we're elitist or whatever. It's that there's only so much capital that we have to invest. And because the check sizes are large, we look forward to being that multi-billion-dollar fund where we can invest in so many more companies. But we're a $50 million fund, so there's going to be limitations on how many companies we can invest in. And when you come to us for capital, you're not coming to us for 10 grand. You're coming to us for $250 to $1 million per check. So that tells you we can only invest in so many companies. So I'm not surprised if we see 5,000 companies and can invest in 50, like truly. But that's because there is limitations to how much capital we have to invest. So again, this is all to share with you that there are things that the VC industry does that I believe is just like, doesn't need to exist, like the gated structures, right? And the difficulty in pitching somebody. But then there's just plain old simple, we have a certain amount of capital and there's only so many companies we can invest in. So just to give you perspective, that's two points maybe I thought I'd share.
No, I appreciate that, Giselle. I'm glad that we got you going. We got the energy going. You're giving us this perspective that we need because we just got to kind of demystify what it is that this VC space is, and this is the kind of dialogue we need. Bias Rehab, shout out to them. They've been supporting us a lot. It's supposed to be a healthy, cohesive relationship. So again, that's what you're speaking to, Giselle. Yeah. Getting rid of those barriers. Those barriers are just, it's unhealthy. It keeps people from, getting to that, the point that they need to get to. And so I appreciate you providing this clarity. At the same time, though, that reality check that you mentioned there is that VC is a really competitive space to begin with. Mm-hmm. And like you mentioned, those numbers, if it's only, if 1% of those businesses get funded, you guys truly are having conversations. You and your team are having conversations with a lot of businesses, but you can't fund everybody.
Right. And if I can just add, I'm going to add one small thing to there. VC funding is not the be it end all. There are so many different other types of funding. Like we see what equity crowdfunding is doing right now. That's opening up opportunities, not only for you to tap into another type of capital, but that we're going to have a lot more underestimated citizens or investors who don't typically, qualify as accredited investors getting into the game. And so VC is not everything. It's not the be it end all. And if you can build your company using your own revenue that you produce from your company, do it. If you don't have to give away a piece of your company because you don't necessarily want to be a unicorn, like you don't have to be a unicorn to do well in this game, right? If you can build something and reinvest your own capital, do that. But by the way, don't think that you can reinvest your own capital and be like out buying shit every day and spending your money. It's like if you take all your capital and you invest, of course you need to live and pay your bills and whatever, but if you just focus and hone in on reinvesting every cent that you make back into the business, maybe you don't need funding. I mean, that's ideal. It's tough because if you want to build something of scale, you're going to need equity crowdfunding capital or a loan or whatever it is. You're going to need capital. But my point is, again, demystify this thing that this VC thing is like, oh, I got venture capital, so now my company is going to blow up. Let me tell you, money is not going to make your company blow up, whether it's VC capital, whether it's equity crowdfunding. Money will not fix that situation. You need to build a good company, a good product. That's what builds a company. You just need the capital to be able to scale it. So anyway, let me get off my soapbox again, but yeah.
We love it. That's why you're here, just to get on that soapbox. I want to pivot a little bit. I actually went to your site and there was a section about, the whys of your general partners, and then your venture team. And I wanted our team, Jay, if you can pull that up, the site, because you got 3 bullets here. Okay. And the first one, capital is placed in the grant in the hands of underestimated GPs. So you mentioned that just now. You spoke on that a little bit. The second one, portfolio companies are led or co-led by underestimated founders. You've been speaking about that the entire time we've been in this conversation. But the last one around companies will naturally be made up of a more underrepresented employee base. That one actually stuck out to me. I wanted to ask if you and your team, do you guys look at, like, obviously you have conversations with the CEO, the founder team of these businesses, these startups that you're, trying to invest in. But how do you go about vetting if they're truly a diverse team, right? If they truly have a diverse workforce and kind of measure that, I guess, when it comes to having equity, not just at the founder level, but making sure that these businesses truly are diverse and equitable across the board.
So I love that question on so many fronts. So here I go, jumping back on my box. It's not for us to define and determine what the employee base looks like. So I want to start there. When we invest in companies, we're not there to dictate to them how they build and how they grow. There are things that we're doing to supercharge their growth and provide them with support that I can guarantee you no other VC fund is doing. But when it comes down to the core operational structure and how they build that, that's not up to us. When I add point number 3 in there, I'm essentially saying the likelihood that there's going to be more employees that look like you and I, when the founders look like you and I, the likelihood is higher, right? Earlier, when I was speaking about VCs, I made a comment and I said, look, in some cases, those structures by design were put in place so that we don't get access to those networks. But then there's some cases where people just invest in people that look like them, right? They're comfortable with those people. They think the same way. They went to school together. They went to B school, right? Whatever brought those individuals together. The same applies here in number 3 is, if you're Black, if you're brown, if whatever, we'll call you underestimated. And you understand how this thing works, you probably will make some effort to find individuals who are just fucking brilliant. Let me stop there. But that also look like you, right? I think there's a greater effort, active effort and passive effort to find employees that look like you or have something in common. Again, maybe you went to B school, maybe you're from the same hood, whatever it is. And because of that, we all know, I mean, I'm not using a specific company for any, I'm just speaking in general terms. When we hear about these companies, these startup companies that grow and they scale and they blow up, and you hear about those early founders, right? Or the early employees, the first 50 employees that came in and they got stock options, and those stock options do incredibly well. Can we imagine what it looks like when there's 1,000 companies led by Black founders, where there's just a few, even 2 or 3 employees that are Black as well, that are part of that initial stage of the company's growth? When those companies start to grow and scale and exit, the exponential value and wealth creation that happens in that third point is tremendous. It's tremendous because you don't need to be a founder to benefit from those stock options or from that liquidity event. And so I look at that third thing and I'm like, it's not just the founders that benefit. It's anybody who came in early. And when a company goes through a liquidity event, whether they were bought, whether they IPO'd or whatever, those employees now have capital that they can do a number of things with. Maybe they didn't have the confidence before. Now they have the confidence and they have the capital, maybe to start their own companies, The angel investors to others in their network that look like them, right? Or they start a VC fund like we decided to do. And then that cycle continues, right? So it's reinvesting capital back into the community, but in different ways. You don't have to be a founder to do that. And I think it permeates a number of areas of a startup company if done well. And so, again, I only start at the GP level to say that chances are, well, not chances are, in our case, all of our entire fund is going to underestimated founders. So if I'm going to cut a check and the founders are all underestimated, and there's a greater chance that at least a good portion of their employees are also underestimated, see how that money starts to trickle down and create an exponential effect. When those companies do well, now you're empowering, creating economic empowerment across a much longer path than you were if you were just, I don't know, if it was just the founder.
Mm-hmm.
Or even the fact that it's the founder. The fact that you're cutting the check to the founder who's never received capital before or has received. The point is, there is a trickle down effect. When you put money in the hands of those individuals, there is a trickle effect that I think a lot of people don't talk about. And then if again, I can't control whether you're an employee and you're going to reinvest or you're going to angel invest or start your own company. But I'm hoping because that's my true north, economic empowerment through entrepreneurship, is that if you're going to do that, it's huge impact. And that's how we build economies. And that's how we can aggregate capital and resources within our economies and actually start to move the needle. It's not my little fund that's going to move the needle, but the impact of it over time, I think, can be tremendous.
Thanks for giving us that breakdown there, Giselle. You touching on that, like you said, it's not really just the founder that wins in this situation. It truly is their entire team.
Yeah.
And it's very interesting on that third point. Just a lot of the founders that we've had on as guests,
Mm-hmm.
when I asked them about, how do you build out your diverse team, or how have you, and they almost say like, I didn't really have to think too much about it. It just happened. So like you said, like putting the money in their hands, a lot of times they know what to do. And a lot of times they're going to put the best person in the role at the same time as building a diverse team. So that's incredible. They don't have to, like you said, there's no lowering of the bar. There's no lowering of the standard at all. It truly is.
I actually think sometimes you're getting a better candidate just because so many of those candidates have been overlooked. I actually think that there's actually better talent out there that's been overlooked. If you can bring them into your organization, and we know this, like whether it's like, I look at entrepreneurship, this is like a sport. When you're out there scouting for your team, who are you looking for, right? You're scouting. You are literally building your team. And now you have some capital and you can decide what that team is going to look like and what they're going to bring to the table. And because so many have been overlooked, I think we have a pool of talent out there. Everybody's talking about pipeline and there's not enough talent. Bullshit. There's a tremendous amount of talent out there. Brilliant as hell. But like the reality is we still all need to eat. We have families, we have things that we need to pay for. A lot of us have done we can contribute and support each other. And we do as communities, we're community driven race and culture. But when we need to work, we still have to pay bills. So if you can work for a company that's going to pay you, at market rate or at least competitively, and you get access to some stock options, and you get your foot into a company that's like at the leading edge of building something phenomenal at the early stage, that's where you want to be.
Mm-hmm.
That's where you want to be.
I love it. I appreciate all that clarity there. And again, just when I went to the site, didn't have to do too much digging. I saw those 3 bullets and it really stuck out to me, Giselle. So I appreciate you and your leadership team putting that in place. I want to transition a little bit. So I reached out to a couple founders that have been on as guests, and just to see, pick their brain a little bit around some questions that they would want to ask a VC. So I got 2 questions here for you. The first one is around there is somewhat of a trend, just not even one industry, just across the board when it comes to businesses leveraging, not maybe non-technical founders leveraging no-code solutions. I'm curious to know, what your preference is or what you see in terms of success for businesses when they're utilizing no-code solutions versus, building out, in-house custom solutions and maybe having technical resources on the payroll.
So there's a few questions there. I know they're all related to technical talent. How do I answer? Because I think there's about 3 questions there. So how do I answer that? One is in terms of using, the first one, existing technologies, or, maybe you're kind of leveraging existing technologies instead of building your own. I think at the end of the day, what you're looking to achieve is not the best technology at the startup stage or seed or early stage. When you're first starting, you got to build whatever you can. Ultimately, you're looking for product market fit. You're looking to whatever it is that you're building, that there's going to be a market that wants that thing. Whether you're going to use out of the box technology, whether you're going to find a technical co-founder to do it, I think that's less the concern, because I almost promise you, it's not always the case, but in most cases, when you're at the seed stage and you get to the early stage and you build, whether you build the technology yourself or it's an out of box, the minute you start receiving some sizable capital, you're going to get to a point where you're going to move from early stage to growth and scale. That scale piece, which does require that the technology is stable and scalable. It's not uncommon, and it's not for underestimated, or this is period. What a lot of startups don't tell you, that at that scale stage, you almost end up rebuilding the entire technology anyway. So, and it's not because you can't code. You can have the best developers and architects on your team, but at the growth to scale stage, very few companies don't almost entirely rebuild their technology. It doesn't mean that you shut down what you've built and you restart something new, but there is a modernization process and a security process and a stability process that gets built into the technology, that has to happen if you're going to scale. It just has to happen. So I'd say be less concerned about what and how you're accessing and creating that technology. Be strictly focused on, does what I have to offer resonate and resonate with the market, whatever it is, right? So I think you can go about it both ways. So I hope I've answered that question. At least for us, we're not going to sit there and be like, oh, you don't have four technical experts on your team and therefore you don't have a business. No, but I can tell you this: if you don't have some technical expertise that you can tap into, it is going to be challenging. It's going to be challenging because even when you're using it out of the box, you're going to need somebody who can do customization, who can address the needs of the market. When they come back, because you're constantly doing user testing, you're constantly checking in with the market, and I hope you are, because the market determines the value and the acceptance of your product. As you're getting feedback and tweaking that technology, chances are you're going to need somebody who's got technical expertise. But I will close by saying this: I almost promise you that if you are clear on your vision for this company and you yourself start executing, you will find a technical co-founder. You will. There's a lot of technical talent out there, a ton. People are always like, oh, I don't have a developer. Are you clear on your vision? Are you clear on your value proposition? Are you clear on what you're building? Have you started down the process? Are you sitting there waiting for a technical co-founder? Because you don't need to wait. You can start with an out of box. You can MacGyver some things, and just to get clear on what it is you're building, you will attract a technical co-founder, or at least a technical partner of some kind to help you when you need to make those changes and evolve your technology over time.
Dropping gems, Giselle. I appreciate it. I definitely appreciate it. Yeah, you answered that completely. You knocked that out of the park for me. And next up, a couple founders had some questions around the due diligence process. Mm-hmm. I think some of the founders that we've had on as guests, they're fairly new. They're fairly early on in the process of pitching the VCs. Okay. So they wanted clarity around what that due diligence process actually encompasses.
So of course it's going to vary, but for the most part, look, you need to get your presentation clear, your pitch right, first and foremost. You need to be clear on what you're building. You need to be clear on the market size of what you're building. What is your value proposition? Who are your clients? What are they willing to pay for it? You need to have clarity on these things. It doesn't mean those things are not going to evolve and change. But like I shared earlier, we're not immune to the fact that we have a limited amount of capital to invest. And so that first layer of due diligence, for most VCs, we are slightly different, but not incredibly different. The difference is we're making every effort so that you can pitch us. But if you don't pitch us right the first time around, it's going to be hard for you to get a second chance, not because we don't want to listen to you. It's because there's another 5,000 pitches we need to listen to, and we have limited resources. Every company does. So I'd say, first and foremost, be clear on what you're pitching, what you're building, and nothing's perfect. Let's also say there's no VC in the world, I don't care who they are, that expect perfection, because it can't happen. You're too early stage, but at least you yourself be clear on what that is. That's the first thing of due diligence. People don't consider the pitch to be part of due diligence, but it is, because it actually is the fastest way for you to get to the next round, and the fastest way for you to get kicked out from even getting to the next round of due diligence. Then yes, you need to have something there. At least in our case, we're not a pre-seed fund, we're a seed fund, which means you need some valuable traction, whatever that valuable traction is based on what you're building, and or some revenue. You need something, right? We're not investing in ideas. There are funding vehicles that do. We're not one of that. So I'd say those two things. Financials. Be clear on your financials. What are you spending now? Where are you going to allocate the capital that we're investing into you? Where's it going to go? What's the breakdown? In what areas of the business will you be applying that capital? And there's a second, at least a second is like, what is your growth trajectory? What do the numbers look like that are attached to that growth? Can anybody on the face of this earth guarantee that growth? Nobody can. But you need to be clear on where you're going financially. It's a business, right? This isn't like, that's why you're building this company. It is a business. No matter how much of a passion it is, you need to be clear on what those numbers are going. Does that mean you need to have a CFO as part of it? You don't need any of that. Find somebody. Again, once you get clarity on what you're building, I promise you, attracting the people that you're looking for is not impossible. And by the way, if COVID hasn't taught us that we are, your playground is now global. If you're still thinking locally to find that person to help you put the numbers together and to help you practice your pitch and to help you build this technology, if you're looking locally for those team members, you're looking too small. COVID has taught us that your playground is global now. Find your people wherever they are. Is it helpful that they're local? Yes, because post-COVID or whenever, it's good to get together with the team and kumbaya and get together and talk and strategize. It is. But for where you are, to put together those numbers, it doesn't matter if the person's here, if they're in Brazil, if they're in Nigeria, if they're somewhere in India, it doesn't matter. You just need to get it done, and you got to be prepared, because the first level of due diligence, which is the pitching, can easily kick you out from the second round, but guarantee in the second round, they're going to look at growth. We're going to look at numbers. We're going to look at what your plan is and how you plan to spend the money that we're going to invest in you. You need to have that ready. You do. And no matter how much we've been left out of these systems and structures, and no matter how upset we might be that is the case, that level of uncomfort, or we might be angry or whatever, that's not going to get you farther. You still need to be clear on what you're building.
Thanks for that, Giselle. You dropping those gems. And so as a follow-up for that, I actually had a couple people reach out to me as well. But just seriously speaking, productions, how can someone submit a pitch to MATR Ventures, and what's the process to get that submission in?
Oh, this will be a short answer. So right now, the only reason that we didn't open up our submissions, like I shared with you earlier, we're still building out the fund. We actually started to look at startups in the beginning when we started to get our initial investment, and then we had to stop because it was actually unfair to the founders. There's a few that we continue to speak with because we went down that path, but we realized it's not fair, because for us to do the fundraising and the structuring of the fund and all that, and look at companies at the rates that they were coming at us, wasn't actually fair to the founders. Because if there were companies that we liked, fund's not closed yet. So all I'm saying is, once the fund is open, there is no process to get in. You'll go onto our website, you'll enter some basic information, upload your pitch deck, and somebody will be in touch with you.
Short and sweet. Appreciate that, Giselle.
Yeah.
So I want to ask you one follow up question, just around some of the learnings that you starting
Uh,
your own business and then
yeah.
coming into VC. What's top of mind for you, that top thing that you learned throughout the process of starting your business and now you're doing VC that you wish, like you mentioned 10 years ago when you first started your first business, that you wish you go in a time machine, tell yourself, hey, here's the one thing you got to know as you start your business. What's that one thing?
I don't know if this is going to come up, how it's going to come off, but nothing's really changed. It's just become very clear, more and more clear to me, I would say, the importance of mindset. And I'm gonna only focus on that topic. Building like being an entrepreneur is hard. There's so much hype around it. I get it. There's tremendous opportunity to build wealth. Also agree. But building a company is hard. And so if you can look at anything that is put in front of you, anything that stops you, be it adversity, be it you can't find a co-founder, be it you can't get capital, whatever it is, if you can look at every single instance as a speed bump and not a wall that's going to stop you, you're good. You're good. Part of that mindset is, and if you look at it as a speed bump, you realize that speed bumps have a function. They slow you down. You might have to swerve. It causes, sometimes some unrest. It causes like anxiety and am I going to make it and all kinds of stuff. But I promise you, whatever that thing is, it's a speed bump. If you're a real entrepreneur, and I'm gonna call it what it is, if you're a real entrepreneur, you get that this is a long-term game. This is not a short-term game. If you're hoping to build something in a year because you think it's the best thing in the world, I'm gonna high five you all day. But part of that is knowing that it might actually take you 10 years. Are you ready to do that? Because if you're not, don't get into this game. Entrepreneurship is hard. Do people figure it out sometimes in a year or two? Hey, some of them they do. They have like the stars just align and things happen. So I'm not saying that everybody here or anybody that ever listens to this is going to be like, oh, I got to do this for 10 years. That's not what I'm saying. I'm saying if you're not willing to, don't get into the game. The mindset has to be that you are going to get no's more than you can imagine, right? For all kinds of reasons. You're going to run out of money for all kinds of reasons. You're gonna run into talent issues and problems with your team, and that I can guarantee. But if you have the mindset that those things are a speed bump and not a wall to stop you in your tracks, you're good. That's it. You're good. Because what'll happen is maybe that thing won't work. You'll start another one. Maybe that is the thing that you're supposed to be working on for the next 10 years. But the path is like this, right? It's never a straight path. If you have the mindset that you're in this to win, regardless of how long it takes, you're good. You're going to figure it out. I promise you, you're going to figure it out.
Thanks for that, Giselle. As you were explaining that, I got the imagery of you essentially like smashing through a brick wall. I don't know why.
No, that's the thing. No, but that speed bump will mess with you because it feels like a brick wall, but it's not.
Got it. All right, so you touched on that, just having the mindset. I love that. That's a perfect transition from my next question.
Okay.
So as we were building out, the content, the direction for this season, along with our partners at Valora, Brooke, I know she's in the audience.
What's up?
What's up, Brooke? So we had this quote that she stated around world domination. So we've been sticking with the world domination, right? So I ask everybody this, what does world domination look like for MATR Ventures in 2021 and maybe even moving forward? Like, what is world domination for you?
Oh man. So I'm gonna give you a two-part answer. Brooke, I don't know if you're gonna like this very much, but for 2021, there is no world domination. For 2021, there's three things we're gonna do: is launch the fund, launch what's called the Power Up Network, which I'll touch on a little bit, and start investing. Those are the things for 2021. They are big things. Big things are happening for 2021, but it's not world domination. But I will address your world domination question because I love it. I'll start by saying this. I'm someone that thrives in chaos or crisis, if you want to call it, right? And I'm not saying that's a good thing or bad thing. The idea of being comfortable with ambiguity and thriving in situations of crisis means that I'm probably a little bit off, to be honest. But many entrepreneurs are a little bit crazy. Now, sometimes I think you have to be a little bit different. And again, but what COVID, I think BLM and much of what we saw and a lot of the things that continue to be highlighted in 2021 is that right now, I believe our communities have the absolute greatest opportunity to aggregate capital, our resources, our incredible talents, innovation, our creativity, bar none. We are the leaders in that space. I don't care who says what. And be able to leverage technology to create and build and scale wealth like never before. So when I think of world domination, I think today, as we sit and we have this conversation, and by the way, it's not my fund that's gonna achieve world domination, but I think will be one of the players to help us get there. It's gonna require collective effort from all those general partners out there that are investing in underestimated founders, the citizens that are on social media or buying the products and supporting them, the business leaders that have the opportunities to open doors and help some of these founders land anchor clients with some companies, get them like some real customers. All the social media likes and the social media shares that we're doing. Sometimes we do it passively thinking it's fun, but it's actually helping. When you collectively do that, but intentionally, I think that's when we're going to start to see this thing shift. But we have to do it intentionally. And as much as we're all like me, like you, Kenny, like Brooke, we all have businesses that we're building, right? But for example, what you're doing, Kenny, here, while you're running your business, what you're actually doing is you're aggregating what I bring to the table and what you bring to the table. Brooke being a sponsor and running her own platform, by sponsoring this, she's playing the role of an aggregator as much as she's building her own company. And when we do that on an intentional level, like seriously, there's funds, there's some really, we can talk about the Arlens and like killing it in the game. The minute we start intentionally actually aggregating what we're doing in our own bubbles more and more, that's when world domination happens. So as much as I'm excited about the shit that we're doing, and I promise you after this, with the fund, there's fund number 1, 2, 3. I'll share something with you. We're 90% of our fund is investing in North America. 10% is investing in international markets. As we go from fund 1 to 2 to 3, that equation increases. So, don't be surprised if 30% of our fund is being invested overseas, and our third fund is 50-50. Why? Because the markets out there within our communities, our global communities, is fucking huge. And there's no reason why I'm building a product or you should be building a product in the US and not scaling that thing out and offering it to other parts of the world. Again, if we're thinking of building stuff to sell it in our own neighborhoods or communities or even country, we're thinking too small. So where I see world domination is not in what we're building, it's in the contribution that we're making to the bigger piece of the pie. And I think that, again, mindset and that mentality and the willingness to accept that we can't erase 400 years in 2021, but if we build out a 50-year plan and everybody who's building and creating and shifting and doing some dope shit right now, if we start coming together, man, we're unstoppable. Period. We're unstoppable. We are going to win all day. But I think it does require for people to recognize that, yeah, I want world domination. That's cool. I want that too. But I do recognize that I can't do that on my own. It's not my $50 million fund that's going to shift that shit. I can promise you. And I'm a pretty cocky person, and I think we're going to kill it with this fund. Those founders we're going to invest in, they're already brilliant in their own right. We're just going to give them some capital and access to some networks and advisors that they're not going to be able to get anywhere else. So I'm pretty cocky to believe that we're going to win all day. But imagine if we start like really coming together and doing some collective shit. That's world domination. That's the game I'm here to play. So if there's anybody out there listening, and it's you, Kenny, and it's Brooke, and whoever's out there, and it's like, yeah, I'm in this to win, but I'm also keeping my eye on the long-term game, then let's talk. because I think that's when we're going to see what we're looking for. It's not going to be my fund that's going to do it. I promise you.
Appreciate you giving us that breakdown there, Giselle. I feel like there's some world domination in there. I'm not gonna lie. I feel like there's some world domination in what you just said.
Kenny, there's some world domination, but I'm just saying I can't do it on my own. My team, I think they're the bomb. The founders that we're going to invest in, they're the bomb without us. They're just going to be a little bit faster to scale and reach more markets because of us. But man, can you imagine, Kenny, if there's like, I don't know, 1,000 funds like ours, right? And 10,000 people doing what you're doing. Brooke's building her company, but she's also sponsoring what we're doing right now. When you start like really, really putting that as a collective and the exponential growth and the generational wealth that's created from that, and then the wealth that's reinvested into those systems, okay, now we're talking world domination. Yeah, I mean, I'm not trying to get all serious on you. Like, I'm excited. I think that we're going to kill it with this fund all day. Like I have levels of excitement that I can't even express to you. But to work in tandem with others, like collaborate in tandem. Let's be real, folks. Like these systems that you talk about that we've been left out of, man, it's not one person, eh? There's been some methodical, thoughtful design put together, put behind those systems for many, many years. When people talk about 400 years, I would argue it's longer than that. Do we really believe that one fund in a year is gonna no? But maybe, why don't we look at what we can achieve in the next 50 years? Let's just start there. We're gonna kill it, people. We're gonna kill it. We're gonna kill it.
That's dope. I appreciate that. So you just touched on, I think there was one thing you wanted to touch on in there around the network, launching the fund, but you mentioned the network. So I'm gonna pass it to you. Okay. We're gonna wrap up, but I want to make sure I give you, the last couple moments. Share on how you're building out that network, in addition to, just throw in there how people can keep up with what MATR Ventures is doing, and so they can see how things roll out for you guys.
No, I appreciate you, Kenny. So I would say in closing about the network, we have something that we created and we designed called the Power Up Network. Power Up is, by the end of this year, it'll be 500 advisors. These advisors, this network has been purpose built to support the 50 or so companies we'll be investing into. And then the question is, how do they support it? So we've got, from those 500, it's intentional. It's intentional by design, meaning those advisors typically fall into one of three categories. They are either founders that have built, grown, and exited their companies. Okay, they've been there. They've been through that whole cycle. We're hoping that a third of our advisors are those. The second group is what I call the corporate purse strings. So these are like C-suite or like senior level people in large corporations that have buying power. They also have a say in where they spend their money and who they partner with and what startups they can potentially partner with. That's the second group of advisors. And then the third group, last but not least, we call them like basically subject matter experts. So they might be experts in AI or in robotics or in beauty and lifestyle brands. Whatever it is their specialty is, they've failed, but they've succeeded in that space. And so subject matter experts, they can be industry related verticals or they can be tech, right? Maybe they don't know a lot about the beauty and lifestyle industry, but they really understand AI, or what we call, or it's been called like exponential technologies or future technologies, which is like AI, robotics, 3D printing, and network technologies. Those four technologies, I know we can talk about blockchain and digital assets and some of those other things that are coming around the corner, but I'm speaking about the ones that right now today are almost default technologies in everything that we touch. Whether we see it or not, these technologies are powering almost everything we touch. Blockchain is it's going to do some beautiful things, and digital assets are going to do some things too. But I'm just talking about those four. When you can get people that are industry specific and specialized and have done it and have succeeded in those industries, but part of those subject matter experts are also people who understand the technologies really, really, really well. That is what we call the Power Up Network, and we built that from scratch. It's like an invite only. We've reached out to a number of individuals and continue to in North America, in South America, in the Caribbean, and parts of Africa. And every company we invest in will have exclusive access of this network to help them build and grow their company. They're not there to have coffees with you and give you high five and tell you how amazing you are. They are there to give you strategic advice. They are there to introduce you to talent so you don't have to be spending ridiculous money on recruiters. And they are there to open doors and make introductions that lead to some bottom line revenue impact or some kind of business impact to what you're building. So we're really excited about Power Up. I have not seen anything like it. And so if you want to talk about world domination, we're going to kill it with that, because it's 500 today, but it's not going to be 500 next year. And there's all kinds of incentives baked in for them to continue to help our portfolio companies grow. But that's the network. I think we all know, even with capital, the best deals are done because of people you know or they know you. And so this network is purpose built specifically for the companies we're investing in. So yeah, we're excited as hell about that. Again, I'm going to stop there, but that excites me a lot, because growing up, you don't grow up like I didn't grow up with capital, and I didn't grow up with a network. Now that I've started to build that, I truly understand the impact that can have. And I want every company we're investing in to have instant, like when I say instant, literally, the minute you get into the portfolio, meaning we decide that we want to invest in you and you decide that you want to partner with us, you get instant access to that network. So yeah.
Yeah, that sounds amazing. Like you said, just having the effects of having some of those resources in place, people who specialize, and like you said, doing the parts of the business that, again, a non-technical founder, somebody who just wants to, they have the idea, they figured out the pain point, but they need some of those additional resources. I can't wait till you guys launch that. And we'll make sure that we get that out to the masses when you do.
But Kenny, I got to tell you, so these people will not be there to be technical, hands-on people. These are people who can look at the technology that you're building. So I want to be clear, because I think it's important to set expectations for people, that they're not going to all of a sudden get access to a software team that can just build all their stuff. And the companies that we're investing in, we're not investing at the pre-seed stage. So we cannot invest in companies that just have a good idea. I'm not there yet. There isn't something else we're building in the future. And I know that there's a lot of people building some amazing equity crowdfunding structures right now that are more suitable to that. Mm-hmm. It's very clear that people understand that if they're coming to us, they need to have something that's already in motion. It can't be at the seed stage. It can't be something written down on a napkin or on a piece of paper. Yeah. We're not investing at that stage. But there's been cases where people come to us and we'll introduce them to somebody else. And so we have started to build that network. That's what I was saying earlier. I was like, there's people playing different parts in this. And I can't tell you how many founders that I've introduced to another funding source, because it's just not it's not the lane we're playing in. But doesn't mean I'm not going to introduce you to somebody else. I will. But I do ask that if you're going to come to us for funding, understand at what stage we're investing in.
Got it.
Cool.
I appreciate that clarity. And again, that's part of demystifying. Again, that's why I appreciate you being on our platform, just demystifying some of the things around VC. It's just not this black box. You're peeling back the layers and giving people that glimpse that they need to see. So moving forward, though, how can people make sure that they keep up with the insights? Like you said, you're still building out the fund. Mm-hmm. But you plan on launching that this year. So how can people, stay in touch with the brand, social media, things like that?
Yeah, I mean, I'm on IG under Giselle Brazil 333. I don't know if I can type that somewhere. Can I type that?
We will get it.
You can.
We'll get it out. Yeah, we'll get it out.
You can share it. You can follow me there, or we just put up the MATR Ventures on IG as well. You can follow us there. So MATR Ventures is on IG now. Again, people, we haven't launched, but we're there. You can follow us there. You can get in touch with us there for sure. Yeah, that's it. Thanks, Kenny.
Appreciate that. And it's not very often that we see founders put on their personal. So I love seeing that. That's direct access. Giselle, you're putting that out there. It's just the easiest, right? But that transparency, like that's big for someone who's doing all the things that you're doing to be able to put yourself out there and have people reach out to you directly. So appreciate you sharing that with the audience.
Do it. If it ever gets to a point where I don't get back to you right away, man, just don't like take it easy on me. That's all I gotta say.
Mm-hmm.
Take it easy on me. We're here to do the right things, but take it easy on me. We're not there yet. I'm not that famous on social media. I'm actually a pretty private person, but doing this fund, I've had to come out here. So you can reach me on social media. If it ever gets to a point where you can't, just give me a little time to get back to you.
I love it. So, just in closing, I want to thank you, Giselle, for coming on, sharing your story. I think it's amazing what you're doing in terms of VC, but you worn the hat of an entrepreneur. And so I think that's big time. You taking that experience and really, truly building something for underrepresented founders moving forward is going to be big. And like you say, you're not thinking in just 1 year, you're thinking 10 years, 50 years, 45-year increments, right? Like what we could build. And the power of the network is going to be huge.
Kenny, man, we're unstoppable. I don't mean me. I don't mean my fund. I mean us. See this, what you're doing here? It makes all the difference in the world, my friend. It makes all the difference. Just, I don't know what, like, let me ask you this. I know I'm going to flip it on you for a quick sec. What's next for you? From one entrepreneur to another. Tell me what's next for you.
Having conversations with individuals like yourself.
Yeah.
I think we touched on this a little bit, just me starting out, I can be transparent with my audience. At first, it was like, I just want to have cool, amazing conversations with amazing entrepreneurs that look like me in my community. But it's really snowballed having the support of Brooke, Valor, and just the network effect is really what's energizing me right now. So it turns into, Beyond Normal podcast. You guys see that on the screen. It really turns into the Beyond Normal network. So just figuring out what this network looks like moving forward is really going to be the focus for me in 2021. That's my world domination, making sure that it evolves into that next step. Yeah. I appreciate you asking me that because the conversations, again, you touched on it a couple times throughout this interview, just the power of the network. There really is truly something there. It's not like a 1 + 1 = 2 situation. It's like a 1 + 1 = 5 for me right now. And so that's my answer. I appreciate you flipping it on me and me having to wear another hat for a change. Hopefully I gave you a good answer.
No, you're amazing. And Brooke, if you're still out there, Brooke, I appreciate you. And I don't know if her stuff is plugged here, but you got to go check out Valor for sure. Yeah,
we always plug Valor at the end. They're on all our branding at the beginning. But again, Brooke is just an amazing partner. But I just want to say thank you again, Giselle. Somebody said that they need a hat in the comments, so I'll be reaching out to them for that merch sale.
That's what's up. That's
thanks, Giselle, for putting that in and putting that note out at the beginning. But again, thanks for sharing your story. For the audience, thanks for tuning in to the Beyond Normal podcast. Have a great weekend, everybody.
Have a good weekend.
Thanks for tuning in to the Beyond Normal podcast. We can be streamed across all major streaming platforms in addition to YouTube. Come back again.